Ever get that feeling that something's recommending things specifically for you? Like maybe Netflix just nails it with a documentary you never knew you'd love.
Happens to me all the time.
Right. That, my friend, is an algorithm subtly shaping your viewing habits. But what if we took that same concept, that same algorithmic power, to the world of Wall Street, where instead of picking movies, algorithms are making split-second trading decisions? Buckle up, because today we're diving deep into the world of algorithmic trading. So, what exactly is algorithmic trading?
I'm tr-
In the simplest terms, it's like setting your stock trading on autopilot. But instead of a pilot, it's lines of code calling the shots, buying and selling assets based on pre-programmed instructions. Imagine placing a stock trade, but at warp speed, fueled by a computer that can analyze mountains of data before you can even blink. That's the power of algorithmic trading in a nutshell.
And the thing is, it's not some futuristic fantasy, it's the reality of how global financial markets operate today.
Really?
Oh, yeah, we're talking trillions of dollars sloshing around, much of it moved by algorithms as we speak.
Wow.
And it's not just Wall Street titans playing this game anymore either. More and more, everyday investors are getting in on the action as the technology becomes more accessible.
So it's like the playing field is leveling up,
Mhm.
with algorithms becoming the great equalizer.
In a way, yes. Think about a massive institution like, say, a pension fund that needs to buy a huge chunk of stock. They don't want to spook the market with one massive order, right?
Makes sense.
So they use algorithms to strategically break it down into smaller, almost invisible trades. It's like a stealth operation in the stock market.
Okay, let's unpack this stealth operation a bit.
Yeah.
We've established that algorithms are fast and increasingly common, but what's the strategy behind these digital traders?
Well, it's a bit like a cookbook, really.
Cookbook.
Yeah. There are countless algorithmic trading strategies out there. Some are as simple as a basic recipe, others mind-bogglingly complex. But at the end of the day, they all boil down to one thing: identifying and exploiting opportunities in the market, often faster and more efficiently than humans ever could.
So it's like these algorithms are sifting through mountains of data to find those golden nuggets of opportunity.
Precisely. And they do it with incredible speed and precision, spotting patterns and trends that might escape even the most seasoned human trader.
Okay, so let's start with something we can all relate to: trend following algorithms. Imagine for a second that you're a surfer trying to catch that perfect wave. These algorithms are like the expert surfers, riding the momentum of market movements by when prices are on an upswing and selling when the tide starts to turn.
Spot on analogy, but let's dive into some of the more intricate strategies now. How about arbitrage? Imagine walking into a flea market, right? And you find a first edition comic book for like a steal.
Nice.
You know it's worth significantly more online, so what do?
I'm guessing buy it and flip it.
Exactly. That's arbitrage, exploiting those price differences in different markets. Algorithms. They can scan multiple exchanges simultaneously, spotting these discrepancies and capitalizing on them in a flash.
Before anyone else can even notice.
You got it! It's like they're playing a high-stakes game of speed chess, making moves faster than we can even process. And then there's index fund rebalancing, too.
Okay, I've heard of that one, but to be honest, I don't really get it.
So picture this. You have this giant index fund, right, tracking, let's say, the top 500 companies.
Okay, got it.
Now, periodically, this fund needs to adjust its holdings to reflect changes in the index. This creates ripples in the market, with some stocks being bought and others sold. Algorithms pick up on these shifts, anticipating the moves and profiting from the resulting price fluctuations.
So it's like they're, predicting the future of the index based on these tiny little changes.
In a way, yes. They're analyzing historical data, identifying patterns, and then making bets on what's going to happen next.
So with all this talk of speed and profits and, predicting the future, it all seems pretty complex. What does it actually take to build and deploy these algorithmic trading systems? Are we talking rooms full of supercomputers and like lines of code that would make my head spin?
You're not far off. It definitely requires some serious technological firepower. We're talking powerful computers, sophisticated programming, and lightning-fast connections to the markets. Not your grandma's stock market anymore, that's for sure.
So it's more like a digital battlefield where algorithms are battling it out.
That's a great way to put it. And the thing is, with all this talk of speed and profits, we can't forget that there's another side to this coin, a side with potential downsides we should probably examine.
You're totally right. It's not all, sunshine and roses.
Yeah.
While algorithmic trading can definitely make markets more efficient, like you were saying, providing that much needed liquidity, and maybe even driving down costs for us everyday investors.
Absolutely.
There's like this whole other side to the coin.
Yeah, you got to think about that.
We should probably examine that.
For sure.
So what are some of those potential downsides we should be aware of when we're thinking about algorithmic trading?
Well, I think one word that comes to mind is volatility.
Volatility. Okay.
These algorithms, they react to market movements in the blink of an eye,
Yeah.
Which can be great for efficiency, of course.
Right.
But it also amplifies any of those sudden swings. It's like a ripple effect, right? One algorithm reacts, triggering another, and before you know it, bam, you've got a mini tsunami on your hands.
A mini tsunami. That's a scary thought. So this is something that, like, everyday investors we should be concerned about, or is this more of a, something for the big players to worry about?
It's definitely something to at least be aware of. Knowledge is power, after all, right?
True.
But it's also important to remember that markets, they're going to go up, they're going to go down, with or without algorithms. It's just the nature of the beast.
That's a good point. So it seems like algorithmic trading is a bit of, I don't know, like a double-edged sword.
Yeah. It can bring these amazing benefits, but also some risks. Exactly. It's a powerful tool, and it's definitely here to stay. Like any tool, it can be used for good or, well, not so good. The key is understanding how it works, right? And staying informed.
Well said. As we start to wrap up our deep dive today on algorithmic trading, it's clear that this is constantly evolving. What started with these, basic algorithms has morphed into this complex ecosystem of high-frequency trading, AI-powered strategies, and who knows what the future holds.
It's definitely an exciting time to be watching the markets.
Absolutely. And for our listeners, remember that the world of finance is changing faster than ever. Stay curious, stay informed, and hey, maybe you'll be the one coding the next big trading algorithm.